Welcome everyone. I just came off set and I'm going to tell you what I told Fox Business anchor Maria Bartiromo this morning. If you asked me a week ago what the biggest risk for the market is, I would have said the Fed and higher rates. Today, I've got a different answer. Welcome to the Money Runner. It's Tuesday, September 6th. This is your Market Minute. I'm David Nelson. The Fed and rising rates have been weighing on markets for most of the year. Tough talk from Jay Powell at Jackson Hole and the higher for longer rhetoric hit investor sentiment. Stock investors bought it. We've seen a better than 50% retracement. Bond investors, not so much. Fed fund futures show the terminal rate is up just 10 basis points since his speech and still looking for rate cuts in the back half of 2023. Pivot to Europe. Energy is back as my biggest concern. Putin continues to use energy as a weapon and is getting away with it. When news hit Friday that Gazprom was shutting down the pipeline to Europe, U.S. stocks erased strong gains, closing solidly in the red. Yesterday in Europe, we saw nat gas futures up as much as 30% intraday. They pulled back today, but expect more chaos as Europe scrambles to come up with a plan to get through what could be a very cold, hard winter. It's not surprising that the euro hit a 20-year low while the dollar hit a 20-year high. The second half of the energy tag team, OPEC, announced a 100,000 barrel per day cut in production. This after President Biden made a state visit in part to secure increased output. Look, 100,000, it's just a token gesture and will have little impact on supply, but it's a clear message from Saudi Arabia to the rest of the world they mean to defend pricing and still have cartel-like power. It's nauseating, but a few years ago I was able to print that OPEC as a cartel-like structure is dead. But a few bad decisions later, that's not true anymore. Globalism may not be dead, but it's definitely in intensive care and may not survive. The breakdown in our supply chains during COVID started the wheels in motion, but now we see the importance of bringing manufacturing back home. China and the United States are on a collision course and will challenge each other on a range of issues including trade, foreign policy, intellectual property theft, and given the live fire drills in the Taiwan Straits one day militarily. We talked about it last week, but the news from NVIDIA is no small matter. Increasingly, government is going to weigh in when it comes to advanced technology transfer to China. Now under restriction regarding a sale of advanced artificial intelligence chips to China, NVIDIA says they'll see a $400 million quarterly hit to sales. This morning, futures are up modestly as we come back from a long holiday weekend, but it's going to be a pretty nervous session, especially given how quickly stocks erased Friday's gains. If you missed any of our pods, please click on the one coming up on your screen right now. And if you like today's podcast, don't forget to subscribe, and please feel free to post your comments, good and bad. Trust me, we can take it.